Hello, I'm Anushka Sengupta from Impact Magazine, and we have with us today Mr. Mahesh Balasubramanian, who's the Managing Director and CEO of Kotak Life Insurance Private Limited. Mahesh, happy to have you here.
Happy to be here, and thanks for having me here.
Right. Mahesh, the big move that everyone is talking about is zero GST on insurance. So how is Kotak Life tweaking its product pricing and marketing communication around it, and how will this move benefit the sector overall?
First of all, we laud the government of India for taking this sector and its requirements quite seriously. I think India, we all know, is a very, very poor country in terms of protection penetration, right? Both in terms of the number of people insured and the level of insurance. India is lagging behind. So we are really very grateful to the government for taking this sector very, very seriously, and therefore providing the sector GST exemption is a very, very positive move forward, right? And as all responsible insurers, we're all passing on the full benefits to the customer in terms of pricing benefits, so that this can lead to better penetration and finally pave the way for insurance for all, which is one of the objectives of Viksit Bharat. Along the way, of course, there are certain problems that we are facing currently in terms of the lack of the input tax credit, which is something that all of us will find a solution, right? Already discussions are on with distributors to make the commission inclusive of GST. We're also trying to see how we can optimize our costs. So through optimizing of our channel mix, product mix, etc., the idea is to absorb the impact of this. This will take some time, but we're all focused on making sure the customer benefits the most, and this leads to better penetration, which is the objective with which the government exempted the sector from GST.
Right. What is Kotak Life's biggest growth focus for FY26?
For FY26, I think we look at growth from a holistic pattern. First and foremost, we are committed to expanding our footprint in terms of distribution. We closed last quarter with 333 branches. Our idea is to take it to at least 400 branches by, let's say, calendar year 26 end. That's the objective. So footprint expansion is certainly one. Continue to invest in products, because for us, we really believe that ultimately we need to make offerings which are more meaningful and relevant for the consumer. So we've been working on a lot of new product launches, and happy to say that some of them have done extremely well in the market. We launched Tulip, we launched Gen2Gen income. Some of them were products which were first time in the category. So we will continue to innovate and on products. And continue to also push our agenda forward on digital and on AI, etc., so that the user experience, both for our end consumers and for our distributors, improves remarkably. And that is reflective in our relationship NPS scores, etc., which have seen a remarkable improvement in the last few years. In fact, we're among the top 3 players now in terms of NPS. So putting the customer at the center of what we do, and trying to build an ecosystem of products, offering solutions, user experience, etc., along with physical expansion, because this sector will continue to be dominated by phygital. I don't think we are going to see a surge in direct-to-customer digital offerings from the life insurance sector. So it will continue to be phygital. So to that extent, our investments on technology and branch and people will continue.
Okay. Also, Mahesh, how are you rebranding life insurance for younger consumers, especially the Gen Z?
Well, I think first of all, our products, we've got 2 products called Kotak Gen2Gen and Protect and Gen2Gen Gain. So that itself signifies that we are offering something which the new customers will get interested in terms of products, right? We're also looking at the way we can build protection in the savings segment. I think the capital markets have done extremely well for the last 2-3 years. So we've launched a product called Tulip, which is term with ULIP, because people are excited about what's happening in the capital markets and want to invest in equity. So for our customers who are looking at unit-linked plans because of the buoyancy in the market, we said, okay, let's mix it with a little bit more protection, so that the insurance is also embedded in the product itself for ULIP. So such kind of products. We're also looking at lower ticket type products. We have a product, for instance, at about 2,500 rupee bite size, which probably gives a 10 lakh cover to the consumer. So looking at it from the bite size, looking at it in terms of aligning our products with what the customers are wanting to listen to is our approach. Having said that, it's a challenge. We are not an instant gratification industry. People today are used to the world of instant gratification. You order something, in 5 minutes, the person is there at your doorstep. And people are looking at capital markets, FNOs, broking, etc., where they get instant results. We are unfortunately not an instant gratification industry. So it makes our challenge a little bit more in terms of appealing to the right audience and relevance, because we are all about protection and long-term savings, which means preserving something that you have and building over a period of time is our approach. So it's like telling somebody, go for a walk every day, eat healthy every day, and you'll be fine for your life. It's different from saying, take this medicine, in half an hour, you'll be all right. Right? So we are not in the instant gratification industry. So therefore, our challenges are a little bit more.
Also, with 100% FDI and then composite licensing norms coming in, how is Kotak Life preparing to compete with new entrants?
Well, first of all, we welcome more competition. 100% FDI, if it's going to result in many more global players coming in to the country, that's a welcome move because customers will benefit finally. Having said that, it's not going to be an easy path. There are already a number of companies here, and if you see the industry today, it's pulling more towards the top 8-10 players, increasing their market share, right? Which also means that in this industry, distribution is the key. And coming in, a new player need to have the ability to sustain and invest in this market for close to a decade or more before they start seeing results. So we need deep-pocketed investors to come in, global brands which can come in and try and redefine the category. So to that extent, it's not going to be an easy ride for people coming in, especially in the life insurance industry. Having said that, as I said, we are quite happy with more players coming in. That only intensifies the competition, makes everybody run a little bit faster. But hopefully all of us will be running in the right direction and building value for our stakeholders and customers.
Right. Also, how is digital or AI contributing to new policy sales, starting from lead generation to complete onboarding?
Yeah, see, if you ask me the digitization and the impact of AI, ML, we used to call it, today we call it AI, all this analytics, all this started almost around the COVID time, when all of us started investing more. In fact, the tools were there, but the adoption was an issue. I think COVID taught us to cascade the adoption, and adoption really grew immediately after COVID and during COVID. Then we kept on adding throughout the life cycle of the customer. On the prospecting stage, what can we do better in terms of defining the customer persona, in terms of looking at the persistency at the time of onboarding itself, what kind of customer we are onboarding, so that our right product for the right customer is coming out of some kind of analytics and analysis. How do we make the right pitch to the customer? That is something we are working on today in terms of using AI to see whether we can give a bespoke pitch to a customer after understanding his or her requirement and persona. The next is the entire process of onboarding a customer is fully digitized now. We are seeing increasing adoption of account aggregator, eKYC, CKYC, etc., so that we are able to do a paperless onboarding of customers. Deep analytics keeps running in our underwriting in any case to flag off. In fact, we have been using a system called the dynamic, scoring system for onboarding new customers. We have been using it for quite some time. It throws up immediately if the customer profile is inferior or we need to collect more documents or look at medical underwriting slightly differently. So I think we look at decisions based on AI, ML analytics which are coming in at the time of onboarding. On the claim side, again, we use extensively now analytics and AI and ML for deep mining our data to see whether there is anything which we need to investigate on the claim side before we make the claim. All this is to make sure that frauds don't hit the industry, because that is the biggest problem for us. So we are trying to use as much as possible on all that. Customer service is one area where digitization and automation has really helped us. Close to about 87% of our servicing, which can be done instantaneously, is now instantly done. WhatsApp has taken off like in a big way as far as customer servicing goes. Today, almost most of your policy servicing can be handled through a WhatsApp bot, where you ping a particular number, it gives you menu options, and you keep progressively moving from one stage to the other, and you'll see that your entire policy serving is done automatically through a bot and using WhatsApp as a channel. So a lot of work is happening in all these areas, but much more can be done. I think AI is really changing the landscape of very many industries, and we see it as an opportunity, especially with GST coming in and input tax credit going out. I think a lot of focus is going to be on how efficiently we are able to manage our costs and productivity. I think a lot more can be done on the AI side, and use cases are coming up. Every month we are seeing one more use case which becomes a little bit more practical at the ground level, and we are also looking at the costs of implementing AI, etc. So I think it's a journey, but all of us have embarked on the journey. All of us are closely watching the space, and everybody, we're all doing things which can help us run faster, better, and more efficient.
Right. Also, can you tell us what's driving your shift towards the emerging affluent segment?
Well, emerging affluent segment is the most exciting thing happening in India are basically the demographics of this country. We know we are set to become the third largest economy shortly, and our per capita income is set to cross $4,000 by 2030. And also the demographic profile of this country is changing in terms of the number of middle class people and the affluent people coming in. So I think aspirationally Indians are thinking big, and there is a lot of consumption happening on the credit side as well. So insurance, normally we all talk about individual insurance. A lot of things are happening on the credit life or the group insurance, where you take a loan, automatically we try and give an insurance to, in case a person who's taken the loan passes away, then the debt is paid off by an insurance policy. So I think aspirations are increasing, and we are focusing on how do we improve our products suitability to customers. So I think ticket sizes has been going up. That's a positive development. We only hope if number of policies can grow as much as the ticket size, industry will benefit in terms of new customers. But ticket size growth has been quite high in the last few years, which talks about the aspiration levels of people going up. So both in terms of protection, retirement solutions, that will become extremely critical. While there is so much of talk about India being a young country with mean age of 28, 29, don't forget that we are a large country. Right. With 140 million people, we are a very large country, and therefore we have a lot more Indians who are probably going to hit retirement very shortly. By 2030, about 190 to 200 million people will reach the age of 60, and by 2050 that number could become 250, 300 million. That's like Canada, Russia put together as a country in terms of population, right? Are we doing enough in terms of protecting these people? If you're going to retire in 20 years time, 30 years time, have you thought about how are you going to sustain your livelihood and sustain your current lifestyle 20, 30 years from now? You've got to start thinking about it at this age when you're maybe 40, 45, that's the right time to start thinking, right? So we are positioning our retirement solutions, annuity products, etc. So protection from dying young, protection from living long, and along the way protection from vagaries of interest rates, and inculcating a strong savings habit so that you're able to have enough corpus for meeting all the needs of your life while you're still thinking on instant gratification. How are you really balancing your short-term thinking and medium and long-term thinking in terms of thinking about the future? So that's, I think, the roadmap for all of us. And how do we make this interesting finally for customers to consume our products? We are largely a product where it is sold to the customer. Right. How can we make it easy for the customer to buy our products? I think that's the roadmap all of us need to move towards.
When should we, Gen Z, start thinking and investing in retirement solutions?
Two things you should. First, start thinking about protection. That you should have thought of it yesterday, right? Not today. Because the earlier you get into the protection bandwagon, the better. Because if you're 25 or 30 and if you buy a policy for 60 years or 40 years, it's much cheaper than buying the same policy at 40, right?
Right.
So catch them young, watch them grow is very important. Therefore, people should get into the protection very early in life, because the earlier you get in, the cheaper it's going to be. And with 18% now exemption on pure term insurance, that's the most exciting thing from a customer's perspective. Right. Second, on retirement, I think the idea would be around 40 you should start thinking. That will give you about 20 years before you retire to start saving, so that you can have a corpus at the end of 60, which can give you a sustainable annuity. In fact, we are looking at redefining. We don't want to call it retirement anymore. We want to call it reinvention, because as aspiration levels keep going up, there are so many people who are today 45, 50, 60 saying that I want to do this after 60, I want to go on a world tour. Somebody says I want to go and do, I want to become a social entrepreneur. Somebody says I want to become a musician. Life expectancy is going up. Today, I think on an average now, Indians are going to live longer. I've got at least 6 people in my family who are all 85, between my uncles and aunts and in-laws and my father, etc. Right? So life expectancy is going up, and if people's aspirations keep going up, then there'll be a lot more things rather than just putting your feet and retiring at home. People want to have a second relook at their life and reinvent their life, so for which they need to start planning today. So coming back to your specific question, by the time you're hitting 40, start thinking. If you can do it earlier, great. But if you don't do it by 45, then you're going to have a problem trying to sustain your life.
Right. Also, Mahesh, if you can tell us what is the marketing mix of the brand, which channel takes the lion's share? Is it digital? Is it print, TVC?
Talk about media?
Yeah.
For us, it's honestly speaking, we have been more digital focused because we are Kotak, part of the Kotak brand. So Kotak Mahindra Bank is our promoter, 100% shareholder, and I think that brand signifies a lot in the Indian market. So therefore, what we do is more about being very looking at the audience in a very targeted way and making sure that we build relevance and awareness to our specific customer cohorts. So we have been more active on the digital media because given our amount of spends that we can afford, and we believe it's far more efficient. And we also look at platforms which are slightly unconventional platforms. I can give out a series of things we have done to improve our brand. For instance, do you know that we are the official life insurer for RCB? We all know how RCB has performed and how frenzied the RCB fans are, and they are far more digital than any other IPL franchisee.
Right.
And we have been associated with them for the last 2 years. And that has given us a fillip in terms of understanding right audience, digital. We're also on KBC this year. We are one of the people who are the proud sponsor of the life insurance. Lifeline in KBC is today sponsored by Kotak Life.
Right.
So we look at alternate platforms like this, which can give us access to a relevant audience in a big way and in a slightly more efficient way. So we'll largely be digital, print more through PR rather than only advertising. But it'll be a mix of various stuff. But yeah, if you ask me, largely digital.
Which marketing metric matters to you the most? Is it reach or is it engagement?
Both, isn't it? Right. Both. I can't say it's one or, but what is more important is for us is the net promoter score of our customers. Right. So, but yes, building awareness and building engagement, both are important. Social media gives you the ability to do both. Right.
Right.
If you do print, it's more about awareness. Right. In social media, we see that on LinkedIn, on Facebook, etc., we are able to engage better with our customers. So that's why digital probably is a platform which can build you both awareness and engagement.
Right. Also, are you looking at influencer partnerships or
we do have influencer partnerships already going. We do that thematically at various points of time. If it's a new product launch or in a time when people are looking at tax savings towards the end of the year. So we do look at influencers, and we do have a healthy mix of influencers also trying to build awareness about our products.
With Kotak Life completing 25 years now, firstly, congratulations on that. Can you tell us what are your top strategic, focus areas in the next 3 to 5 years?
First of all, it's great to be 25. So we are 25 years young, I would say. And more so in the life insurance context, it's 25 years young because large life insurance companies normally live for 200, 250 years.
Right.
That's the general lifespan. Because even today, as I'm speaking to you, one of my partners or advisors could be selling a product to a customer where we'll be talking about a whole life product, where if it's a Gen2Gen product, the tenure of the product can be 80 years. Right? So therefore, life insurance per se, we are building companies for 200, 300 years.
Right.
So 25 years is an important step, but nevertheless, a few steps we have taken into a long journey because that's the nature of the industry. Because therefore, what is important here is to stay relevant to our consumers, important to build trust and credibility and sustainability over a long period of time.
Right.
So therefore, for us, our motto is the vision is to continue to be relevant for our customers, build size with relevance, make sure our products and offerings and the user experience is relevant for our customers and distributors who play a very important role for us. At the same time, we want to build trust, sustainability and credibility so that we are able to add value to all our stakeholders over a long period of time.
Right. Also, how do you balance bancassurance, agency and direct digital channels?
In fact, we are one of the most balanced companies in the industry if you see. Though we are 100% promoted by Kotak Mahindra Bank, our bank assurance is roughly about 45 to 48%, less than 50%. The other channels contribute 50%, which is largely coming from the agency and a few other alternate channels that we do and some amount of direct business. D2C, even for the industry, is not a very big component.
Right.
At the industry level also, it will probably be 2-3%, largely because our products are a little bit more advisory-led. Very difficult for somebody to buy our traditional plans without engaging with somebody. That's a challenge, of course. How can we simplify the plans and make it easy for customers to consume off the shelf, right?
Right.
But having said that, it's something that all of us are trying to get better at. But largely it is agency and bank assurance with certain direct channels contributing business. And I don't see that dramatically changing over the next maybe, if there's change, it will probably change slowly over a period of time.
Right.
We don't expect something dramatic to happen on the digital side where it will become the largest channel. I think that it will take some time for that evolution to happen.
Okay. Also, lastly, Mahesh, what are the two trends in this industry that excites you the most, and how is Kotak Life capitalizing on those trends?
I think the trend is India itself. The shape of things to come in India as a country. What excites me most is India. India, whose aspirations have gone up, India, who's now a very major player in the global stage, India, which is talking about high per capita income, high consumption, India, which is talking about digital, right? So I think the idea of India excites me a lot and excites Kotak Life a lot, because I think we should all be blessed to be in a country like this where everybody is struggling for getting growth, and we are able to get 6 to 8% growth, and hopefully that will get only bigger over a period of time. So I think the exciting thing is about India and the way India is shaping as a country, and
Right.
we are happy to pick up trends from there and see how we can be relevant to our consumers.
Lovely knowing from you, Mahesh, and thank you so much for your time.
Thank you very much.
Thank you.